Yesterday we came back sharply sharply is maybe too strong, but we came back over one, what did we end? 0.9 on the day, something like that on the S&P. We were down as much as 1.5%.
Yesterday was supposed to be a sea change. It was not a sea change. We're not going to get a sea change when Stamps.com gets a $6.6 billion bid from
Thoma Bravo. Let's talk about it because it's actually a large deal, and you can see the stock, of course, is up sharply. $330 a share, of course, all cash, given it's a private equity transaction. That is a 67% premium. You can see it's trading a bit below that $330 a share. In fact, pretty tight spread, you'd expect. There is a 40-day go shop. We often see this now as a part of any of these go private transactions. 40 days in which they have time to potentially consider and solicit alternative acquisition proposals from third parties. Jim, what I found most interesting here, and I don't have a lot of detail on the composition of equity versus debt, but it's who's providing the debt financing. J.P. Morgan advised on the M&A front the seller, the Stamps.com, but the firms providing financing, and I know you'll get this the minute I say it, Blackstone Credit, Ares Management, PSP Investments, and actually Thoma Bravo Credit itself providing credit to a deal that its private equity arm is doing. None of those.
That's not J.P. Morgan.
None of those are banks. None of them are banks. Not one. They're all credit funds providing the financing for what we would assume is going to be a lot of financing for this deal. And I know why, so I'll tell you.
But I was going to say, if I was President Biden, and I wanted to tell you, well, wait a second, I want to look at different industries, I would say these are unregulated entities. Maybe you got it. Maybe this is a mistake to allow this.
They are, and that's the key here. They're unregulated entities. They're not banks. Therefore, they're not subject to the leverage lending rules that the Fed
what Jamie Dimon's complaining about over
the banks. And so the banks, in some way, are cut out. Now, J.P. Morgan is advising, but they're not financing, at least not according to the press release. And I think that's interesting. Now, again, I don't know what we're talking about in terms of debt and equity. It's a pretty big. This is a sizable private equity transaction at $6.6
But
billion.
David, I want people at home to recognize how consequential this can be. These companies, not regulated really by the Fed, can easily go over their heads.
Well, these are credit funds run by very very reputable. I mean, Blackstone Credit, Ares, they know what they're doing when it comes to apportioning credit. But you're right. I mean, the people who are investing in these funds are obviously looking for some sort of significant return above at least treasuries, one would expect, taking on risk. But they are financing this deal, not banks. I mean, not that many years ago, it would have been a bunch of banks.
Shepard Smith here. Thanks for watching CNBC on YouTube.